UK economy slowed down in the month of April, according to the latest figures, adding to fears of recession. It's the second month in a row that economic output has declined. GDP fell 0.3% in April after a drop of 0.1% in March. The data suggests it's the first time that all of the economy's main sectors contributed negatively to a monthly GDP estimate since January 2021. UK Chancellor Rishi Sunak says the government is fully focused on growing the economy to address the cost of living for the longer term. Official data also earlier showed consumer prices rising rapidly. Let's cross now to Giles Gibson, who's live joining me from London. Giles, talk us through these numbers. What stands out?
Stands out really is that this was just a big surprise for traders in the City of London as they got their week started on Monday morning. I mean, you know, analysts had been expecting the UK economy to grow by around 0.1% in April when these figures came out. But as you were just saying, suddenly we have this surprise shrinking of the UK economy and really just output dropping right across different sectors. So the services sector, which of course is really important here in London, you know, accountancy firms, lawyers, that kind of thing, seeing output fall, as well as the production and the construction sectors here in the UK as well. One thing that's really interesting to note is just the impacts that the closing of the NHS test and trace scheme for coronavirus and the impacts that had on the UK's GDP figures as a whole. The UK government really over the course of the pandemic has been ploughing billions of pounds into running this scheme. It's not just the testing labs, of course, but they've also been spending money on the coordination, on tracing people, so on, you know, call centres and that kind of thing. That has now come to a close, and the Office for National Statistics here in the UK is saying that just closing the test and trace scheme has knocked about 0.5%, 0.5% off of GDP growth in April. So once again, just really not a good picture for the UK economy as we head towards a big announcement on Thursday from the Bank of England about interest rates.
And Giles, how have markets been reacting to those numbers?
Yeah, Ollie, just looking at the FTSE 100 just a couple of minutes ago, that is already down by 1.7%, and we can expect it to stay in that kind of territory for the rest of the day. Also looking at some key stocks that are headquartered here in London, looking at Shell, for example, the big oil company, their share price down around 3.5% and falling pretty dramatically. Similar story for BP, also down by around 3.5%. I think partly reacting to these GDP figures, but also the fact that you've got this growing COVID-19 outbreak in the Chinese capital, Beijing. So, you know, oil companies perhaps looking at the sense that there could be much lower demand coming from the Chinese economy in the coming months if they continue with their zero COVID strategy. And I think just these latest GDP figures means that there's just going to be even more focus on that announcement that's coming up on Thursday that I was mentioning. The Bank of England expected to raise interest rates to 1.25% to try to rein in the widespread inflation that we're seeing here in the UK.
Thanks, Giles.